This is Matthew Kratter's Bitcoin University. Today I want to answer the question, what is this cycle's biggest scam? The history of Bitcoin is the history of one scam after another, all of which involve different ways of persuading people to part with their money so that the scammer ends up with more Bitcoin. We've been through a number of these scam cycles, and they've gotten progressively more sneaky over time as the public figures out that they got scammed in the previous cycle. So the first real scam cycle was the ICO boom of 2017 to 2018. ICO just stands for initial coin offering. That's modeled on IPO, initial public offering for stocks. There were thousands of these new scammy coins, altcoins that were launched with some sort of message like, buy my new altcoin because it's stronger, better, faster than Bitcoin, has newer tech. And guess what happened after you bought their quote-unquote better Bitcoin? You ended up with a useless piece of depreciating garbage, while the scammers used your money to buy BTC for themselves. The EOS scammers were a great example of this. They did an ICO that raised over $4 billion, even though they hadn't even developed their blockchain at that point. You got EOS tokens, EOS, and you can see how they've completely collapsed relative to the dollar. They've collapsed even more relative to Bitcoin. So you ended up with this worthless token, and then the company that gave you the token, Block.one, ended up with the Bitcoin. They currently are still holding 164,000 Bitcoin. They're a private company, and that's worth about $19 billion. So this was the trade. This was the scam. You gave them your money, you got a worthless token, and they ended up with Bitcoin. Now, eventually, everyone but the dumbest people figured out that ICOs were a scam, so the scammers moved on to their next stage. Before we discuss that, if you're finding this video interesting so far, I just ask you to help to support this channel's educational mission. Hit the subscribe button. That does really help. Leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. So as we said, eventually everyone but the dumbest people figured out that the ICOs like EOS were a scam, and so the scammers moved on to their next stage. Their next stage was buying and of telling you to buy NFTs or rare digital art or inscriptions or rare sats, rare satoshis. Even Bitcoin companies like the parent company of Bitcoin Magazine, UTXO Management, got in on this scam. We can see a snapshot here of them trying to sell the Bitcoin logo in the form of an inscription, but it's basically a JPEG for 12 Bitcoin. Now, like most scams, the prices of these things, of course, collapsed. This is a list from Wikipedia of the highest prices paid for NFTs, non-fungible tokens, and we can see that some sold for $69, $52 million. And as this article points out, please note that these are the prices that were initially achieved. Most of the listed NFTs are basically worthless as of 2024. So I'll put a link to this in the description notes below, and you can see how this was just another bubble like the ICO bubble, which ended up collapsing. So what's the biggest scam for the current cycle? I can say with some confidence now that I think it's these Bitcoin Treasury companies. There are different names for it. Some people call them leveraged Bitcoin equities, and some people, I think a better name is BTC penny stocks, but these are all the same things. They are companies, corporations that try to accumulate a lot of Bitcoin. And I should say, I don't think there's anything wrong with an operating business choosing to hold some or all of its accumulated earnings in Bitcoin rather than T-bills or other short-term US dollar holdings. In fact, it's a smart thing to do if you don't want your company's balance sheet to become one giant melting fiat ice cube. There's also nothing wrong with a company like MSTR pioneering a new Bitcoin accumulation strategy. But here's the thing, what the wise do in the beginning, the fools do in the end, as the old proverb is. This is clearly a bit of a parody, but I think it does sound familiar. This is from Predator. Bitcoin influencers be like, quote, check out the hot new Treasury company. It makes $0 in revenue and trades at only a 10x MNAV. I'm fully vested in PIPE with a 30-day lockup. In 2 years, they could own 5% of the Bitcoin supply. Buy my bags, please. Now you have to ask yourself, is this really that much different from the EOS guys? The pitch is always the same. I know that you feel that you're late to the Bitcoin game, so I'm going to help you catch up by giving you access to my supercharged altcoin or my supercharged Bitcoin treasury company that you can hold and use to outperform Bitcoin. And then you can, of course, exit at the peak because, of course, everyone can time these bottoms and peaks. And then you can buy more Bitcoin than you otherwise would have been able to do. Now, in the past, scammers use altcoins to do this. Buy my coin because it's better than Bitcoin. But most people have figured out that scam, as we've discussed. So now the pitch is a bit different. The pitch is now, I love Bitcoin. Everything now is a Bitcoin affinity scam. Bitcoin is the best, which is why I want to give you my super Bitcoin, my hyper Bitcoin, my amplified Bitcoin, my better than Bitcoin. Francis of Bull Bitcoin does a great job of discussing that in this clip, which I'm going to play for you right now.
What bothers me more about so-called institutional adoption, it's really the new meta of Bitcoin treasury companies. They're taking the brand of Bitcoin, which is pristine and spotless and everybody loves it, and they're selling something that's just like Bitcoin, but better. And this is what the shitcoiners have been doing for the last 15 years. They're saying like, my coin is like Bitcoin, but it's different. It's a super Bitcoin, and it's a hyper Bitcoin, and it's a Bitcoin that gives you more money for your money than Bitcoin. They're trying to capture the interest and attention market to their thing instead of just selling UTXOs. They say, don't buy a UTXO, buy a super stock in my company, which will give you more yield than the UTXOs. They're doing these Wall Street reverse takeover kind of pump and dump schemes. They're orange washing their fiat scams with the Bitcoin brand.
They're orange washing their fiat scams with the Bitcoin brand. I think that sums it up quite well. One to keep an eye on. I haven't done deep analysis in this, though Molly Big Magic DAO has. So if you're a holder or you're thinking of holding Nakamoto, with the ticker is NAKA, she's got some good analysis which you can take a look at. Again, I haven't done a deep dive on this because I don't really care. I don't own this. It's not something I would ever buy. But as she writes, NAKA's PIPE investors, this is the private investment in public equities, got in at a price of $1.12 a share with no lockup. 455 million shares at $20. They're sitting on a 20x. But with the average daily volume around 2 million, there's 10 billion in potential sell pressure waiting to dump. Post-merge, things are going to get ugly. Basically, they're merging with an existing company called Kinley. Imagine the dummy that buys at $20. And then she had some further analysis after its collapse. This is the beginning of August 1st. NAKA Nation is sitting on a 60 to 80% loss, but still hoping the merge will magically pump it back to $35. But the truth is the 80% drop from $35 to $6, and I think it's now trading at $9 or $10, so it's bounced back a little bit. That drop was just the warm-up. The real dump begins when the PIPE shares, which is 65 times the current float, or 6,400% dilution, hit the market. Holding $2 would be considered a bullish case. So if you're holding NAKA, just be aware of the dynamics. I'm not saying this is going to happen, but you should definitely be careful. Only time will tell, but I expect the vast majority of these pure play Bitcoin treasury companies to disappear, probably after the insiders dump on the suckers who've been stacking these stonks instead of stacking sats instead. MSTR seems to have enough of a moat to survive and even continue to thrive, but remember that there are no guarantees when it comes to investing, and there's really no special law of the universe or of economics that ensures that you must earn more money from taking on more risk. Most of the time, if you take on more actual risk, you're going to lose more money, apart from what the economists, all of whom reside in university departments and don't have that much money, apart from what they assert. If you take on more actual risk, you're going to end up losing more money. Bitcoin has had high returns, but not because it's risky, but because it's actually not risky at all, while most of the world still views it with a lot of suspicion. So we have sort of variant perception going for us when it comes to investing in Bitcoin. And I think that's why BTC itself, why Bitcoin will continue to have very high returns, while most of these Bitcoin treasury companies will not be around in a few years from now. So I think it's important, as Matt Odell says, stay humble, stack sats, hold your Bitcoin in cold storage. It's really all so simple when you think about it, so just don't let other people try to profit off of you by convincing you that you should be buying something other than Bitcoin. When they're doing this, they're usually doing it so they can stack more Bitcoin themselves. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.